Hey everyone, John here from School of Trade. Today we're going to be taking a look at a wedge breakout pullback, just a little bit extended is all, looking for an entry at 41.4, there we go. And now we're looking for a move up for our target. Now the target's up at 44, we're front running the one-to-one of this breakout move, right? We had this big breakout move breaking out of pretty much all of the range this morning, and I want them to double that breakout move up. So the entry at 41.4, looking for 44. The stop is going to go underneath the low here. I really don't want to see them come back on this. And in all honesty, I really don't want to see them break the low here, but we need to give it a little bit of a buffer. So we'll go a couple ticks under that at 1340. So the entry point at 41.4, stop is at 40 even, and we're looking for 44. Really good risk reward on this. The reason I'm waiting a little bit longer to get into the trade is mainly because, well, we had a pretty good wedge, but then they had this massive breakout all in one candle. Nobody really wants to see that, right? They don't want to see a bunch of wick on the highs. They don't want to see a really, kind of weak candle overall, especially if it's supposed to be a breakout, so they're going to wait. It's followed up by a strong bear candle in the opposite direction, but notice where it found support, right across the bottom. We have the wedge bottom coming up and the EMA all in the same place, propped price higher. Now, you could try to buy the close of that, but it never would have triggered you in. Unless, of course, you hit the market button. But waiting for a little bit more confirmation again. Can they close back outside of the top of this wedge? If they can, that's a big clue, and that's exactly what happened. They closed outside of the highs. Now, this isn't the best looking candle either, in all honesty. It's about as good as the big breakout candle back here. But in context, we see the sellers failing at the lows. We have EMA support. We have wedge bottom support. We have a breakout pullback of the wedge. Everything is pointing to the upside. So even though it's not the best looking candle in the world, the context of the situation makes it more than good enough to get into. Plus the risk reward helps offset any potential decrease in probability anyway. So makes it a really nice potential trade here. Now we just have to see if the buyers want to show back up to the party and slam that market up into that 44 objective above. Very large bull breakout here going back up again. I want to reduce all of the risk here, and I don't want to see them come back at all. We've come one tick away from the target, so I'm going to reduce all of the risk, save one tick. And that's just because this huge breakout bar, I don't want to see them break that down. I want them to stay above that area. And it doesn't matter, we get the target filled. So nice little pop higher there. That's really what we were looking for, but you can tell a lot of folks were still kind of concerned. It's not the best looking candle in the world. Let's wait a little bit, right? So then they wait and they get a doji. Okay, well, that's bad for the bears, but it's not exactly good for the bulls either. And then it starts taking off, and then buyers start chasing it all the way up, and that causes this massive eruption all the way back up to the highs for that breakout move that we were looking for. So just a beautiful example of a wedge breakout pullback, giving it a little bit of time just to prove it. And after it has, it allows you to jump right back in and drive it up. So that's going to do it for me. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.